make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on. Call in now. 855-4-SCHIFF.
That's 855-472-4433.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories,
Your freedom.
the Peter Schiff Show.
Good morning, everybody. This is Peter Schiff at schiffradio.com. Be taking calls at 855-4-SCHIFF, 855-472-4433. Well, thank God it's Friday, I guess. Anyway, the gold market, another new record high in gold this morning. It's up about $5 an ounce. So much for the correction. The market made short work of that. Silver, silver was up $1.50 yesterday. Most of that gain happened after yesterday's show. It's up another 50 cents today. We're almost at $42 an ounce on silver. I've been talking about this year that I expected that we would take out the $50 high from 1980. I thought we might take it out this year. We might even take it out by summertime at the rate the market is climbing. As I mentioned yesterday, the gold and silver mining stocks are still considerably off their highs. In fact, the HUI is at 588, the HUI. Last week, a week ago, that index was at 605, even though silver prices are much higher than they were a week ago, and gold prices are reasonably higher. And again, that marks or shows the amount of fear in this market, the lack of speculation in the gold market. We got some economic news out today in the U.S., last night in Asia. First in the U.S., we got the CPI, the Consumer Price Index, last month increased by 0.5% during the month. If you annualize that, that's better than a 6% rate of inflation. This is, I don't know how many consecutive months we've had this increase, but obviously inflation is causing prices to rise. But the core rate was only up 0.1%. So that will continue to give the Federal Reserve cover to ignore the inflation by claiming that there is none because of the core. Looking at other prices, import prices last month were up 2.7% in 1 month. So I don't even want to try to annualize that, but that is a huge, huge increase. Also, last night, China came out with its inflation numbers. Inflation is running at 5.4%, the way they measure it, which was more than expected. The economy grew by 9.7% for the quarter, which was higher than estimate. The big news, as far as I'm concerned, was their foreign exchange reserves. China announced that their foreign exchange reserves topped $3 trillion for the first time ever. Now, the fact that they're having a big increase in consumer prices is a direct function of their foreign exchange reserves. That's the inflation. That's where it's coming from. China wants to try to rein in its inflation. It can't do that as long as its foreign exchange reserves are expanding. Then inflation is going to keep getting worse in China. It's not till they shrink those reserves will they begin to tackle the inflation problem. But of course, they can't do that without sinking the U.S. economy. They can't shrink their reserves without selling dollars and selling treasuries. And what will that do? That'll cause inflation to skyrocket in the U.S. as prices go through the roof, and that'll cause interest rates to surge. So that's the predicament that they're in. They can't solve their own problems without destroying the U.S. economy, which they think is a bigger problem. But once they realize what the choice really is, that they can save themselves or save us, I think they will come to the appropriate conclusion. Now, of course, in the long run, as I've said before, the Chinese aren't doing us any favors by maintaining our phony economy, because they are eventually going to come to their senses and pull the plug and let the U.S. economy collapse. The sooner they do it, the better, because the sooner the phony economy collapses, the easier it's going to be to rebuild a viable economy in its place. We're going to have to do it eventually. The question is, how long are we going to wait, and how hard is it going to be to do it? Because the longer the Chinese and the rest of the world supports our economy, the harder it's going to be for us to be self-sustaining. Also, out of Asia, Singapore's economy grew 23% last quarter on an annualized rate, 23.5% actually, to be exact. I mean, that's economic growth. I mean, we're making a big deal here if we get 2 or 3%. 23%. The Singapore dollar rose to its highest level against the U.S. dollar since 1981. And, of course, that is despite the central bank's efforts to restrain the Singapore dollar over time. It would be a lot higher, although they are letting it rise reluctantly because they realize that that's the way to keep a lid on inflation. Inflation in Singapore, which traditionally had been very, very low, is also picking up at an unacceptably high rate. I think it's over 4%. I'm trying to find the exact numbers. And actually, no, Singapore's consumer prices gained 5% for the first 2 months of 2011. So obviously, Singapore traditionally has very, very low inflation. They don't have it now because they've been creating too much money, because they've kept interest rates too low in order to keep their currency from rising even more than the U.S. But they are starting to get the idea in Singapore, and that's why that currency is continuing to strengthen. Other currencies, the New Zealand dollar now is at a 52-week high. In fact, it could be close to a record high. It's just about 80 cents. I don't think I've ever seen the New Zealand dollar at 80 cents. And even though the New Zealand dollar is very low still relative to the Australian dollar, which is around 105. At least it's moving. You know, it wasn't just a few weeks ago, right before they had that intervention in the yen, this New Zealand dollar was all the way down to 71. It's now moved up, but 15% in a very short period of time. That's good for New Zealand because that will bring down the oil prices and bring down other import prices for people in New Zealand. They're struggling to rebuild from their earthquake in Christchurch, and obviously a strengthening New Zealand dollar is a positive, as it is for everybody. A strong currency is always good. The whole idea that a weak currency is somehow going to help you. It's always the argument is always that it helps your exports, but it really doesn't help your exports, because if you have a lot of inflation, ultimately the workers are going to demand raising higher wages to offset for the fact that the cost of living is rising. If you have a strengthening currency that's keeping your cost of living in check, then you don't necessarily have to increase the wages of your employees, because your employees' wages are gaining in purchasing power as their cost of living is declining. And of course, when you have a strong currency, your other raw material costs are low, your capital costs are low. There is nothing but benefit from a strong currency, and there is nothing but negatives associated with a weak currency. Yet for some reason, nobody in Washington seems to understand this. Nobody on Wall Street seems to understand this. It's always about, you've got to weaken your currency. You've got to to preserve your exports, and that is why there is so much inflation all around the world right now. Is everybody is talking about weakening their currency and ways to weaken their currency, which of course is very easy to do. All you've got to do is print it. All you've got to do is monetize debt. It's very easy to have a weak currency. The key is to have a strong currency, because that requires restraint and discipline on the part of government. It requires low spending. It requires lower taxes and regulation. It requires sound money. So it's difficult to get a strong currency. It's easy to have a weak currency, but if you do the right things in order to have a strong currency, then your citizens will benefit. Everybody is going to benefit. But if you take the political expedient route towards a weak currency, then you suffer inflation, and we're going to suffer inflation. We're going to suffer worse and worse inflation. And the ironic thing about it is, the higher prices go, the more inflation the Fed wants to create, because it looks at rising prices as somehow negative for growth, and it wants to combat that by throwing gasoline on the fire. Anyway, don't go away. We'll be back. This is Peter Schiff on SchiffRadio.com.
The Peter Schiff Show. to President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America.
We're sorry.
We're sorry.
Peter Schiff is back on the air.
Welcome back, everybody. This is Peter Schiff at the Peter Schiff Show. And, we have an open lines right now. If anybody wants to call in, the number to call is 855-4-SCHIFF, 855-4-SCHIFF. As I said, the lines are open. So give me a call. Joining the show at 11 o'clock, the 11 o'clock hour, is going to be Tom Schartz, I guess. He is the president of Citizens Against Government Waste. Well, I think everybody is against government waste. The problem is just about everything the government does is a waste. He will be here at the 11 o'clock hour to be talking about his organization and what they're doing about government waste. I'm looking at, again, the gold market. I think we're looking very close to a significant move up here in the price of gold. I mean, the chart looks really, really strong to me. Gold really has been in a holding pattern. Silver has had a significant move, but really the price of gold has not moved much at all. I mean, yes, it's at a record high right now, but it's not considerably above where it was. I mean, gold was in November of last year. Gold was around, 1350, 14. In fact, it got as high as 1390. So now, really about $60 higher than we were. But in that same period of time, the price of silver has gone from about $30 to $42. So silver has had a bigger move than the price of gold. And I think also what's important is that Gold-Dow ratio, because it's right now at 8.5 to 1. If you take the value of the U.S. stock market and divide it by gold, you get 8.5. And that's about where we've been. I mean, we've been there for the last year or so at that level. It's kind of stalled. And I think it's going to break down. I mean, I expect that the Dow-Gold ratio to go considerably below 8.5 to 1. I think it should go down to 5 to 1 sometime over the next year or two, which would be a very substantial move up in the price of gold relative to the Dow. To get a Dow-Gold ratio of 5 to 1 based on the Dow at 12,300, we would have to have the price of gold at around $2,500 an ounce. I think it can get there. I mean, I don't know that it's going to get there this year, but certainly I think by the end of next year, I would bet we could be there. Now, we can also get a Dow-Gold 5 to 1 ratio with the Dow going down. So if the Dow went down to 10,000, for example, that would be a 23% drop from here. Then gold would only have to rise to 2,000 for the ratio to be 5 to 1. But in the short run, I think that is my objective, especially if we continue down this path of reckless government spending, which appears to be the case. The focus now is on the debt ceiling and will we increase the debt ceiling. It seems to me that it's clear that there's no chance that we won't increase it. In fact, if you listen to the rhetoric, why do we even have a debt ceiling, right? President Obama is saying that we can't play politics with the debt ceiling, that we have to raise it every time we get to it automatically. It's too dangerous not to. It's too important. Well, if it's so important that the debt ceiling always be raised, why do we have one? I mean, what is the purpose of a debt ceiling? Obviously, at some point, Congress thought that having a limit on the debt made sense, that we didn't want to be able to go into debt, indefinitely. So we imposed a limit. Well, what is the point of the limit if we're now saying that it would be a disaster to ever not raise it? That even talking about not raising the debt ceiling is a mistake. That we have to put principle above politics and raise the debt ceiling every time we get near it, no questions asked. Well, then just get rid of it. Just repeal the thing and let's end the pretense. I've got a sound clip of President Obama trying to justify, because, of course, when he was a senator, he did vote not to raise the debt ceiling. And now as president, he is trying to explain away that vote. Here's Obama. This is cut number 4.
It seems like you made your job is a lot tougher because of your vote in the Senate against extending the debt limit. When did you realize that vote was a mistake?
I think that it's important to understand the vantage point of a senator versus the vantage point of a president. When you're a senator, traditionally what's happened is this is always a lousy vote. Nobody likes to be tagged as having increased the debt limit for the United States by $1 trillion. As president, you start realizing, you know what, we can't play around with this stuff. This is the full faith and credit of the United States. And so that was just a example of a new senator making what is a political vote as opposed to doing what was important for the country. And I'm the first one to acknowledge.
So in other words, he admits that his vote wasn't what was important for the country. He was doing what he thought was right politically. Well, how do we know he's not doing that now? He's admitting that as a senator, he wasn't thinking about his country. He was thinking about what was right politically for him. Well, maybe he's doing the same thing as president. Maybe as president, the political move is to increase the debt ceiling, right? I mean, what is he saying? Basically, well, I had no principles as a senator, but suddenly I have them now as president. You know, the truth is the right thing for the country is not to increase the debt ceiling. I mean, how can the president say that the most important thing for the country is that we keep marching towards the edge of this cliff? How can going deeper into debt be the right thing? Wouldn't the right thing be to stop the spending, to get our fiscal house in order, to balance the budget? No, the expedient thing is to increase the debt ceiling. Now, the problem is, see, if we don't increase the debt ceiling, we have to face the music now. We have to fess up to the problem and deal with it. But if we do raise the debt ceiling, then we can delay the inevitable. We don't have to deal with the problem now. But unfortunately, we have to deal with a bigger problem later. I think I've explained this point before, but the debt ceiling is self-imposed. It is how much money we're willing to borrow. But the more important thing is how much money will the world be willing to loan. That ceiling is something that we cannot raise. If we run into that ceiling, we're stuck. I mean, the only way around it is for Ben Bernanke to be the buyer and printer of only resort. And that is the real disaster, far greater than what would happen if we had to deal with the problems of not raising the debt ceiling. Anyway, I've got another sound clip just to, on this discussion of taxing the rich. This is from MSNBC. This is Republican or Representative Barney Frank, who's a Democrat. And listen to how cavalierly he thinks it's easy for people who are the so-called rich to pay higher taxes. Pay cut number 3.
The chutzpah of the Republican leadership of the House accusing Barack Obama of being partisan, that's a little bit like being lectured on family planning by the Octomom. These are the people who are the most partisan, rigidly ideological, mean-spirited group we've ever seen running either House of Congress. Secondly, they, of course, distort what the president says. But let's go to the record. Let's look at the evidence. What the president is talking about is returning tax rates for people who make $250,000 a year or more to the level they were at in the Clinton years. I voted for a tax increase under Bill Clinton, and it was for everybody, but it was not for everybody, it was for the people that the president is talking about. And we were talking about them paying 39% instead of 35% of their income. Hardly an enormous disruption in the lives of people with millions of dollars.
So in other words, it's hardly a disruption to have your taxes go from 35 to 39% of your income. 39% of your income.
We now return to the Peter Schiff Show.
Call in now, 855-4-SCHIFF.
That's 855-472-4433.
Rebel Radio, the Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff on SchiffRadio.com. And we are taking calls. We still have open lines at 855-4-SCHIFF, 855-4-SCHIFF. So if you want to be part of the show, ask a question, make sure and call in. Before the break, I was playing that clip from Barney Frank. And basically what he said is that, hey, it's no big deal. We're just raising taxes from 35 to 39%, hardly an onerous disruption. I mean, first of all, that's about a 12% increase in what's obviously the biggest expense. I mean, my single biggest expense is my federal income taxes. I mean, I spend more on federal income taxes than on everything else combined that I do. And so a 12% increase in my biggest expenditure is nothing to sneeze at. But I mean, that's better than 40% of my income. 40% of my income taken in taxes, and I'm not supposed to. That's hardly an onerous disruption. I mean, people fought wars over governments that took a lot less than that. I've made this point many, many times that the medieval serfs only turned over 25% of their production to their lords. I mean, we fought a revolutionary war against the British because they tried to have these small little taxes on us. I mean, nothing compared to this. But first of all, it's not just that 39%. What about the 3% in Medicare that's on all of your income? So that's 42%. And what if you happen to live in a state where the state income tax is 7 or 8%? That's 50%. That's half your money. How can anybody say that when the government takes half of your income, that it's hardly an onerous burden? I mean, give me a break. I mean, these guys are totally clueless about what's happening there. And, because we're taking so much money away from the people who are creating the jobs and taking the risks and starting the businesses, that's why we have so few employment opportunities left in the United States. I just read a statistic that the percentage of Americans who are now in the labor pool is the lowest it's been since 1983. We're at 45.4% of Americans have jobs. Now, the reason that more people started to work back then is because a lot of women started coming into the workforce. And there are many reasons for that. The main reason was that their husbands could no longer afford to support them because inflation and taxes had robbed their husbands of their purchasing power, forcing women into the workforce. But now, despite the fact that we now have all these women that are required to work, we actually have fewer people in the workforce than at any time since 1983, and it's not because they're so rich they don't have to work. It's because there's no jobs for them, and they've given up looking. And the question is why? Well, if we're taxing the job creators so much and regulating them so much, it's no wonder that the jobs are disappearing. But probably even a more onerous statistic is that the percentage of men in the labor force is at an all-time record low. Just 66.8% of American men are working. The rest, some are probably legitimately retired, but the rest are just disgruntled people who are probably not even counted among the legions of the unemployed. But I think probably before this decade is over, no Americans will be retired. Just about every American who is currently retired will be back in the workforce. I don't know exactly what they're going to be doing, but they're going to be doing something, because they're not going to be doing nothing because their money won't be able to support them. I think retirement in America will go the way of the single income household. Just like you can watch, television shows from the 1950s and you can see stay-at-home moms, and for most kids, that's just, history books. They don't have that anymore. You don't have the stay-at-home mom. It's just something that you see in old movies or old television shows. The same thing is going to be about retirement. One day people will look at an old movie and they'll see, old guys, fishing and playing golf and talking about retirement. And they'll be like, what's that? Retire? I mean, stop working? How could you do that? This whole generation, you can't retire unless you save up. And we haven't done that at all. We've promised our people a bill of goods. We've promised them retirement based on a Ponzi scheme. Well, that's not going to work. So, it's going to go the way of the single income household. Yes, the very, very rich will be able to retire. But the days of ordinary middle class Americans ever being able to enjoy retirement are coming to an end. And it is very unfortunate, but it is the consequence of the big government inflationary policies that we have pursued over the years. Anyway, let me go to the phones. First up is Dan calling from Oregon. Dan, you're on with Peter Schiff.
Peter, hey, good morning.
Morning.
Hey, my comment is regarding the deregulation period that started in the 1980s with Reagan. I'm kind of confused on what happened with the free market regulations and why it failed, and how the financial industries just kind of got out of control. If you could kind of help me understand that situation a little bit.
Well, we didn't really have deregulation. I mean, we removed some regulations, but we left other regulations in play. And in some cases, you have one regulation that's meant to counteract the damage done by a different regulation. And if you take away the counteracting regulation, but you leave the underlying regulation, then you end up doing more damage through deregulation because you didn't deregulate enough. But of course, all throughout the last 10 or 15 years, they've been nothing but pile-on regulations into the financial industry. I mean, I experienced that firsthand because I run a brokerage firm, and the regulations are killing me. They are sucking the life out of my company. They bleed it dry. They cause me to spend untold millions just to stay in business. And it's the manpower, it's the labor, it's the time, it's the inefficiencies. I mean, I feel like I just work for the government. I mean, that's why I don't even feel like I'm self-employed. I feel like I'm just a slave of the government every time I go to work. And it takes all the enjoyment out of it. I don't even like it anymore. I used to like it, but when you're working in a regulatory environment like I am, it's not fun. And you don't feel like you're an entrepreneur anymore. You feel beholden to a government. And the government is asking you to do things that make no sense as a businessman. My primary goal as a businessman is to do right for my clients, to get the best possible investment returns for my clients, to give them the best advice that I can, to grow my business. And of course, all the rules and regulations that the government wants me to follow have nothing to do with that. In fact, they undermine my ability to give the right investment advice to my clients. They make it harder. In fact, I'm fighting them. In fact, they would prefer that I gave lousy advice. Because their definition of good advice is buy treasuries. Put your money in what they think is right, not what I think is right. But the whole thing is, so to say that there is financial deregulation is nonsense. I am drowning in a sea of regulation. And I used to say all the time on the campaign trail, I never could have started my company in the mid-1990s if they had the level of regulations back then that they have today. It would have been impossible for me to do it. And in fact, nobody can do it today. Nobody could replicate what I did because the government will not let you.
Do you think the government needs to restore some of the regulations?
No, I think we need to get rid of the rest of them. I think I think we need to get rid of a lot of the rules and regulations in the banking industry. Starting with deposit insurance. Why are we guaranteeing bank deposits? That's wrong. And that's where all the problems stem from, is the government guarantees the bank deposits. And now the government has to come in there and regulate because the government has taken away all the free market regulation. And when it comes to the brokerage industry, I'd like to get rid of FINRA or the SEC. I think if you want those organizations, let them be voluntary. I'm sure every one of my clients would still do business with me if I told them that I wasn't being regulated by anybody, and they should just take their chances if they want to work with me. Anyway, don't go away. If you want to hold on, we'll continue this after the commercial. You're listening to the Peter Schiff Show on SchiffRadio.com.
Peter Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million.
Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff, and watching the price of gold just spiked up to a new high for the day, up about $7.50 an ounce. Silver price is now up 60 cents. As I said earlier in the show, I think gold prices look like they're poised for a huge run up. We'll see if we get much of that increase in the next hour or so that we are going to be together. Anyway, let me go back to the phone call. I think, do I still have, who was on the line with me before? Dan, are you still there?
Yeah, I'm here.
All right, so did we...
So basically, So what? I'm a small business owner, and I believe in the free market, and pretty much everything that you talk about. But I'm just I need some help. Like when people want to argue, like the situation that happened in Iceland with the financial, and the banks kind of just were able to there was no regulation with them. They're able to run wild, and I think kind of what people are saying happened here too, starting in the 80s through the 90s, where the financial institutions just didn't have, they were able to kind of do what they want with the derivatives. They tried to.
Well, first of all, the financial industry, you don't just do what you want. As I said, there's all sorts of regulations. But yes, the problem is that a lot of these institutions are working with guaranteed deposits, and that was the problem. You see, if the bank deposits weren't guaranteed, then depositors would be concerned what the banks did with their money. Since the deposits were guaranteed, the depositors didn't give a damn what was done. And so there you need to have some degree of government regulation to counteract the damage done by the deposit insurance. But if there was no deposit insurance, there would be no damage to counteract. That is the problem. And yes, the problem is a lot of the banks and financial institutions were gambling with other people's money. And that wouldn't have happened without government regulation that made it possible.
What about the rating agencies? What do you think? Should there be different regulation for them, or is there any? Who regulates the rating agencies, giving AAA ratings to people that were...
Well, remember, it's not a free market in the rating agencies. There's only a few rating agencies that the government sanctions. They have to have government licenses, and the government lets them do the rating. I mean, if we had a free market in rating agencies and we had more competition, then we would probably have more honest ratings. But we don't. We have just a few rating agencies that the government sanctions, and so and the government requires you to use these particular agencies for bonds. And so again, it's not the free market operating; it's the government's own distorted version of the free market. And yes, these rating agencies, that the government sanctioned, became captive, of Wall Street, where they wanted to get paid, they wanted to have bonds to rate, and so they had to give them quality ratings so that they could keep creating them, so they can keep generating fees. And I don't even think they really cared too much about their reputation risk, because there's only a few rating agencies that anyone's allowed to use, and if you don't, and that's it. So. Anyway, hopefully that answers.
Peter.
All right. Thank you. Next caller is James, calling from San Diego, California. James, you're on.
Hey, Peter, how are you?
I'm good. How are you?
So I remember last week you interviewed Robert Kiyosaki, and you were in the middle of reading his book. I think you were halfway through. So wondering if you had.
No, I haven't.
Finished reading it.
I haven't read the rest of it. I read about the first third of it. I didn't really get too much from what I read. I mean, it was very, very repetitious. He kept kind of repeating over and over again the same basic stuff. So, but I don't know if it, how it's going to change. But I haven't read any more of it. But I haven't figured out how to not pay any taxes yet based on reading it.
Okay, yeah, because that's been my experience too. I read a few of his books, and they're all pretty high level. They don't really go into specifics, and they're pretty repetitious. And actually, when I was listening to your interview with him, he was doing the same thing during the interview. He was repeating his sales pitch of his book throughout the interview. I don't know if you listen to your own interview. I think you'll see that he didn't really.
Yeah, he seemed to get offended if I wanted to ask him a question, to have him actually explain something in more detail. It was more like, he wanted to go over his pitch, and I think a lot of his business is giving seminars and telling people how to get rich. I think he makes a lot of money doing that. I'm not sure what his other businesses are, although I know he's in real estate, and obviously it was a good time to be in real estate during the 80s and 90s, or a good part of 2000s.
Yeah, and I think there's rumors that his first book, Rich Dad, Poor Dad, the Rich Dad didn't even exist. He kind of made it up. So there's credibility issue too. I think there's been articles written about that. They couldn't find any records of the Rich Dad he was referring to.
Oh, he was.
And also, I I actually went to, I guess I did go to his seminar and years before during the real estate boom, and it was pretty bad in that he had some guy. It was the company called Mile High. It was a real estate developer company in Colorado, and they were selling land to build houses on, and turned out that anyway. To make a long story short, so that guy got sued. So that company went bankrupt, and all the investors lost money. I actually invested, but then I was lucky enough to get out before I got my money back. But a lot of people couldn't get their money back, and that guy got sued. And Robert Kiyosaki was recommending that guy on stage during his seminar. So I guess I would just want to say, tell everyone who's listening to be very careful with this guy.
All right, yeah. I mean, there are a lot of promoters out there. There are a lot of people that have seminars and courses. Buy my books, buy my tapes, and I'll show you how to get rich. And I think more often than not, I don't know too much about Kiyosaki, but I know more often than not, these things are hype. They're scams, and the people who are promoting them, the way they get rich is selling all their tapes. They'll say, I have this secret formula that shows you how to get rich, and their secret formula for getting rich is getting people to buy their secret formula. But they didn't actually get rich, practicing what they're preaching beyond, selling all their books and tapes that tell you how to get rich.
Yeah, I suspect that's how he got rich. Actually, I actually don't think he actually got rich first in real estate. Before he published that Rich Dad.
Yeah, although the thing is, I mean, getting rich by running a publishing empire and getting people to go to your seminars and buy your books, that's still getting rich. I'm not going to, that's still a way to do it. But if that's the only way you did it, it's hard for the people to replicate your success because after all, they're not going to be able to do the same thing.
Yeah.
All right, thanks for the call. Next up is Zach calling from Santa Barbara. Hey, Zach.
How's it going, Peter?
Good.
God, you got a lot of West Coasters calling this morning. I think I'm the third one so far.
And I've got a couple more on hold. Go ahead.
Oh, wow. All right. Okay, I'll get with it. First of all, with Robert Kiyosaki, I've read his books and I've read your books, and I think that the gist of it is just that he teaches you how to make money in a market that is distorted by the Federal Reserve, where you teach people how to make money in a sound country. So.
Although we don't have a sound country right now, so I am telling people how to invest your money in the era of fiat currencies, where we're on the verge of a collapse. So, okay. And that's where we are right now. And I tell people, you got to buy gold, silver, you got to buy foreign stocks, you got to buy commodities, you got to get foreign currencies. There are a lot of things that you have to do. But yeah, I mean, when he's talking about ways to exploit the tax code to your advantage. I mean, my point is, I'm saying that the tax code shouldn't be doing that. But given the fact that it is, yeah, does it make sense to try to figure out how to minimize your taxes? Yes, it does make sense for people to do that. Unfortunately, that doesn't help the economy when people are making decisions on how to invest their money based on a tax code rather than what's economically viable. The country suffers, and our country is suffering because so many people do make those decisions. I'm not saying that they're wrong for them individually, but collectively they're wrong for society.
Yeah, absolutely. And I think that the tax code and the monetary code is similar because inflation is such a tax. It still takes our assets. I believe. I think if they. But I have one question kind of regarding monetary theory. Is that a commercial coming up?
What you got to do, and I have a guest coming up, so if you want to hold on until after the half hour, we can pick up with your question. Anyway, don't go away. This is Peter Schiff on SchiffRadio.com, the gold standard in talk radio.
You work in a shirt with your name tag on it, drifting apart like a plate tectonic. It don't matter to me, 'cause all I want it to be was a million miles from here, somewhere more familiar.
The Peter Schiff Show.
Yeah, see, the problem is I don't think we have the luxury of having another 5 to 10 years. I think we're going to have this fiscal disaster in the next 2 to 3 years, maybe even in the next 6 to 12 months. Because what I think is going to happen is a huge spike in borrowing costs, which will cause just the debt service on the national debt to exceed $1 trillion a year. And I also believe that our creditors are not just going to want their interest payments, they're going to want their money back. And so it's not going to be a question of can we keep on borrowing. We're going to have to start repaying the money that we've already borrowed.
Oh, that's one of the problems that happens when you're heading toward bankruptcy, and interest becomes one of the largest items in your own family budget. Imagine that interest on your credit cards is the biggest single payment you make. You can't catch up like that. So the Republican Study Committee has a proposal to cut $300 billion in 1 year, which, by the way, is still less than 10% of the annual budget. We happen to think that's a great idea. We have our own proposal to cut $350 billion in 1 year, $2.2 trillion over 5 years. And so there are plans out there. It's a matter of whether or not there are enough votes.
But does it make sense? You know, we have a budget deficit this year, a budget deficit of what, $1.6 trillion. So does it make sense when your deficit is $1.6 trillion to talk about cutting $300 billion, because that would still leave a deficit of $1.3 trillion? I mean, isn't a $1.3 trillion deficit much too big?
I can't argue with anything you're saying, but it's not going to happen in the sense that it's a normal operation where a company going bankrupt or on the way to bankruptcy would say, we've got to do everything we can to save the company. Unfortunately, here in Washington, they don't realize that what they're talking about is saving the country, and we don't have enough people here yet to make these changes. Look, the president is not going to sign a $300 billion spending cut. His belief is that the government does a lot of good things, that it needs to keep doing those things. You heard his speech on Wednesday, which was more a campaign speech than anything related to the deficit. And that's unfortunately what we're facing. The House can make some great decisions. They're going to pass Paul Ryan's budget. They're probably not going to pass the Republican Study Committee. But at least Paul Ryan's budget is a better roadmap than the president's.
Oh, absolutely. I mean, now, but that's not going anywhere. I mean, it's not going to go anywhere even in the Senate, right?
Yeah, again, the point is that all of these great ideas are there. There's more discussion about them, but until we have the 218 votes in the House and really 60 in the Senate, and a president that will sign the changes into law, everybody is going to have to do his or her best to keep pushing to get as much as we can get. Even this continuing resolution, while it was, again, far short of what needed to be done, it's the first time they've cut spending at any level in many years. So we got to keep pushing for more and more. And people, by the way, can't run around and say, oh, I don't want any changes in Medicare or Social Security. We're way beyond that at this point. You have to do that to prevent us from going over the edge.
Well, there have to be changes in Medicare and Social Security because they don't work. I mean, Social Security is a Ponzi scheme. It was a fraud from day one. It was a mistake to have adopted it. The Congress, the president lied to the American public to try to tell them that they were creating some kind of funded retirement system where there was all this money being paid into a fund, like you were paying premiums and you were going to, and everybody was a beneficiary. The whole thing was a lie from day one. And now we're having to deal. I mean, this is probably one of the single biggest disasters in American history was Social Security. I mean, more people are going to be wiped out by Social Security than any other government program. And, of course, Medicare is potentially even worse. So we've got to level with the American public and basically say, look, these programs don't work. They're broke, and they will impoverish the nation if we try to continue them. And if we do continue them, no one's going to get any money anyway because there's no way the Social Security money is going to have any value. When they have to run it off the printing press, you're going to get a Social Security check, but you're not going to be able to buy anything with it. So what good is it going to be?
Well, you're much too logical for what goes on here in Washington, even though most all of that is essentially correct. People like to get something that they think is free. They don't feel any pain yet from any of the things that are really going on. Interest rates are low. Economy's not terrible. People aren't out on the streets. So
the economy is pretty terrible. I mean, a lot of people. Well,
but it's not. But we're not. We're not. Again, other than people who are unemployed, generally people think, all right, I've got a job, but they're not thinking about the future. They're certainly not thinking about our children and grandchildren, and the fact that we are likely to be the first generation to leave a lower standard of living for the next generation, if we make it at all, unless some other country comes in and says, hey, I want all this money back, and, pay up.
Yeah, I mean, I think that the economy is nowhere near as miserable as it's going to be a few years from now. But still, it's I think that people don't connect the dots between, let's say, the rising cost of living and what the government is doing. They don't understand that food and energy is so expensive because we're running these deficits and the Fed is monetizing them. So they don't make the connection. But I think what we really need to do in Washington, as you said, since Obama is not going to sign any kind of reasonable reductions in government spending, that's why the Republicans in Congress need to draw the line in the sand on the debt ceiling and refuse to increase it. Because if they don't raise the debt ceiling, Obama has no choice.
Well, I agree. That really is the big vote. It's a bigger vote than this continuing resolution or Paul Ryan's budget or anything else. That is the creditworthiness of the United States at stake, and there are lots of discussions about what will be kind of the big deal there. Will it be hard spending caps? Will it be demands to put the Ryan budget or something like that into law?
All right, well, we'll talk a little bit more about this after the break. Don't go away. You're listening to The Peter Schiff Show on SchiffRadio.com.
Put it in a song and it goes like, whoa, amber is the color of your energy. Whoa, shades of gold is playing that.
The Peter Schiff Show.
To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America.
We're sorry.
We're sorry.
Peter Schiff is back on the air.
Welcome back, everybody. This is Peter Schiff, and I'm speaking with Tom Schartz at the Citizens Against Government Waste, and we're talking about the debt ceiling vote, which is coming up. And, it's not about the creditworthiness of the United States. I mean, we're not creditworthy as far as I'm concerned. What the argument is about is there a limit on our debt? I mean, why is there a debt ceiling if every time we get to the ceiling, we just raise it? I mean, they should either abolish the ceiling completely or enforce it. And you've got all these politicians that campaign for a balanced budget amendment. Well, here's the chance. Let's have a balanced budget right now. All you have to do is vote no on the debt ceiling increase, and, the party's over. We have to cut spending. We have no choice.
That's a good possibility. Again, it's unlikely, but I think a balanced budget amendment itself is not the right answer, because that's going to take another 7 years, and regardless of how we're spending the money, as you've indicated, that could be too late. What you need is an enforceable budget process that limits the amount we can spend and limits the revenue that can be raised, and you work that down to the point where you are, in both cases, under 20% of GDP, and then you can talk about balancing. But unless you have something enforceable, there are ways around all of these proposals.
Right, but if they simply refuse to raise the debt ceiling, doesn't that give government no choice but to cut spending? I mean, don't they have to cut spending automatically by massive amounts if we don't raise the debt ceiling?
They would, absolutely. They would have to do a lot of things that are a lot more dramatic than what they're talking about in the budget, and that may be what everything comes down to, is they reach some kind of compromise that's closer to what the Republicans in the House have been talking about than what the Democrats in the Senate and the White House and the President has been talking about.
But even what the Republicans are talking about in the way of cuts is still too small to head off the crisis. That's the problem.
Not the Republican Study Committee proposal. As I said, balances within 10 years, and really, Peter, you just cannot do it faster than that. You can't say we're going to cut 1/3 of the expenditures of the United States tomorrow.
Well, but why not?
Because it won't. Because first, A, it won't happen, and B, it is honestly too dramatic a cut that you would have an adverse impact on everything that's going on. So you could say you'd like to do that, and if we were all in charge of our own organization, you could do that. But I think the plan that the Republican Study Committee has to balance the budget in 10 years is much, more than anyone else is doing, and that's the kind of strongest answer that's out there.
Yeah, the thing is, though, that we increased the spending very rapidly. I mean, we the spending exploded in just a few short years, so I think we should be able to rein it in. But what people don't understand is how much damage the spending is doing. You can't damage the economy by cutting government spending. You can't cut government spending enough, because the more the government spends, the weaker the economy is. The only reason that we don't appreciate it is we don't understand the cost, because we're able to borrow it at such a low rate of interest. Just the way people who were taking out subprime mortgages didn't understand how much the mortgages cost when they still had a teaser rate. But all of a sudden, when interest rates spike, we're going to realize that all the pain, how much it really costs to spend all this money, and the whole economy is going to implode. And if we wait until our creditors force us to cut spending, it's going to be a lot worse than if we did it on our own terms.
I just couldn't agree more. It's one of the reasons we've been pushing our Chinese professor ad, as we call it, around the country. I'm sure many of your listeners have seen it, but the idea is in 2030, and maybe sooner, the Chinese have essentially taken over, and we, quote-unquote, work for them. And the only reason they're the ones in the ad is that they have the largest share of the foreign-held debt. If the French had that share, it would be in French. But we certainly don't want someone else taking control of our country. We don't want the IMF telling us what to do. And there are certainly a lot of warning signs out there.
Well, absolutely.
When PIMCO, the largest bondholder in the world, starts shorting treasuries, there's a problem.
Well, China just announced yesterday that their foreign exchange reserves, which are principally U.S. dollars, now exceed $3 trillion. I think the Chinese already have enough dollars to buy every company in the Fortune 500 and still have a bunch left over to start buying up real estate. And so I don't think it's going to take until in 2030 that commercial could be a reality just in a few short years.
Well, again, we're hopeful that this message is getting through to Congress, and all we can do is keep pushing as hard as everybody can to get them to pay attention and do what's necessary. And the debt ceiling, as you mentioned, is really the best place to do that, and we'll see what the plan is, because I don't think anyone knows exactly what they're going to do. Probably won't be until late May or really mid-June until they have that vote.
Yeah, I mean, how effective do you think you can be? When you're lobbying against government waste, there isn't a particular constituency that benefits when you eliminate waste, because all the politicians seem to care about, doing things that get them votes. But it seems that just doing things that help the country rarely gets anybody votes, because there's no one special interest group that benefits. Everybody benefits kind of equally.
I think that's changing a little bit. There were certainly a lot of politicians last fall that got elected promising to cut spending, and as I said, they've come in and tried to do that, at least in the House. So they know that that's, from their standpoint, the right thing to do, and many of them don't care if they get reelected. They're trying to do what's right for the country. But again, there aren't 218 of them in the House or 60 or so in the Senate, and we just have to keep pushing to make sure everybody understands the consequences of not addressing all these issues now.
I mean, how many people do you think? Do you think there's any of the establishment people that have been there that perceive the real threats, or do they not even care? It's just their own reelection is just too important for the national interest to even come into play.
No, I think if you look at someone like Paul Ryan, who's been around a long time, and again, one could argue that he doesn't do it fast enough, what he has proposed is so much better than anything else that's been around, and something that probably should have been done 5 or 6 years ago. But it's been accepted by the leadership in the House. It'll be approved as the quote-unquote most radical budget from the big spender's point of view. But it is the first time that the debate has been engaged like this. The president would not have made that speech on Wednesday if it hadn't been for Paul Ryan's budget. They have to come out and start attacking it because they don't like it. But I'll bet you if you took it to the American people and said, hey, this is the least we can do to move the country toward, keep the country from going bankrupt, they'd say fine.
The nerve of the president to try to categorize, eliminating deductions as spending cuts. That if they raise taxes, they want to count it as the government reducing its expenditures?
Probably not the best choice. And again, there's not much of a list of real spending cuts in anything that the president has done.
In fact, the only cuts they had is the cut in the interest on the debt, which is all a mirage because interest rates are going to go up, which means the net interest cost is not going to fall like the president believes, but go through the roof. I mean, I think interest on the national debt is going to be the largest expenditure in the budget very soon.
Well, the projection has been 10 years. It might be faster than that, and that will be the day when everybody would look around and say, wait a second, how did we get here? Well, it's because you didn't do it 5 years ago, 6 years ago, whatever it might be. And this is the position that our politicians have put us in. Then there might be people out in the streets, not because they're getting thrown out, but because they're going out demanding.
Well, I think they're going to be out there because if the only way to avoid the spike in rates is to create massive inflation, which will be much worse. But anyway, see what you can do. See if you can bang some sense of their heads. We don't have a lot of time, and we don't have a lot of time left in the segment, so we'll be back after this commercial break. Thank you for being with me, and this is Peter Schiff on SchiffRadio.com.
We now return to the Peter Schiff Show.
Call in now, 855-4-SCHIFF.
That's 855-472-4433.
Rebel Radio, the Peter Schiff Show.
Welcome back, everybody. It's Peter Schiff for the last half hour of the Peter Schiff Show, and the gold rally continues. We're now up about $10. A silver just sold off. It was up 75 cents. Now it's only up 60 cents. But, you know, the gold stocks are barely even positive. The Huey index, the HUI, is up less than 0.2%. You know, even though we're at a record high gold price today, a 31-year high in silver prices, gold stocks are 4% below where they were a week ago. 4% lower, even though gold is better than $20 an ounce higher. Silver is $4 an ounce higher. That's a huge move in the price of silver. Yet the stocks have actually gone down. Why is that? Well, because there's no speculation in this market. You know, we've got a 10-year bull market, and there's no speculators. I mean, that people are talking about a bubble. It is the furthest thing from a bubble, in my opinion. In fact, if you look at the real risky stocks, look at like gold exploration companies, those stocks are in the toilet. They haven't gone anywhere. You know, so when we eventually get to a bubble, when people finally believe in this bull market, you know, you're going to see those stocks flying. But right now, I mean, this is the most underappreciated bull market ever. Nobody is speculating. Nobody is buying the stocks. Everybody is watching the market going up, thinking it must be a bubble, yet nobody is bothering to speculate, which is, of course, defines the opposite of a bubble. Hey, you know, I wanted to mention some sad news. And I found out last night that Joe Battipaglia passed away. And some of you might remember if you were seeing me at the money shows. I used to go to the money shows. I don't do them anymore, but I used to do these investment conferences for years. And I did them they were at the money show. They went to Las Vegas, Orlando, San Francisco. And they always did a bull and bear debate panel. And I was always one of the bears, and Joe Battipaglia was always one of the bulls. And so I got to chat with him quite a bit, during these conferences. I've also been on a few television appearances with Joe, and I always liked the guy. I mean, we disagreed quite often, but I thought he was a nice guy. I really did, and I think it's very sad that he passed away at the age of 55, and I feel horrible for his family. I think it's a great loss. I'll miss having him on. And I think one of the things that I liked about Joe is, Joe was always a bull. I mean, he was very bullish and obviously very wrong towards the end of the 1990s and even early on, going into the financial crisis. In fact, if you want to see the last bull-bear debate that I did with Joe Battipaglia, it's up on YouTube. If you type in Peter Schiff Money Show, and you'll see the bull-bear debate. It's about, there's, 5 or 6 different, 10-minute clips. But you'll see the bull-bear debate with me and Joe. And there, I think Louis Navalier might have been the other bull, and I think Martin Weiss might have been the other bear. But to Joe's credit, once the financial crisis kind of hit, he finally did become quite bearish on the economy, and he seemed to understand a lot of the problems, and so he ended up finding himself in my position, often, being the bear on television, defending himself against a bunch of bulls. So I think he finally did start to appreciate the problems in the U.S. economy, during the last several years, and so I gave him credit for that. But anyway, I was saddened to hear that news last night. But anyway, so I thought I would mention it on the show. Anyway, let me go back to the phones. Next caller is Darren calling from California. Darren, you're online.
Hey, Peter. How you doing?
Good.
Hey, I had a comment about your guest yesterday, Solomon Kahn. I went on and watched one of his videos actually about currency, and he was doing a gold-backed system versus a truly fiat system. And the one thing that he mentioned in there, and he didn't stress it a lot, but the one thing that the fiat system needs to work is trust. And when you have special interests and these guys' own self-interest at heart, there's no way a fiat system can work for long term.
Well, it can never work.
It'd be interesting for you to go on there and watch that video and kind of, I don't know, maybe get him back on and kind of debate him about it a little bit.
Yeah, I was watching CNBC this morning. I can't remember the guy's name, and they were talking about, gold. Or I think Kudlow was on, or should there be a gold standard? And this guy was just making these idiotic statements one after another about how important it is that we have a printing press. That gold doesn't work because we can't print it. That we need money that we can print. We have to, the precise reason that gold does work is because you can't print it. I mean, somehow this guy thought that the most important thing is that you can print money out of thin air, and that's what you need. And that he kept saying there's not enough gold to run the economy. We have to have money that we can print. It was just one piece of nonsense after another. And he was criticizing why the euro. He said, well, the euro's never going to work as a reserve currency because you can't print it. It's like so because we can print our currency into oblivion, that's what makes it good to be a reserve currency.
Yeah. And another comment about your caller earlier on regulation. I hear this talk about regulation all the time, and regulation's always mentioned without mentioning the counterfeiter of last resort. And all regulations are basically meant to counteract the damage that the Fed does, but nobody ever mentions the Fed. I mean, you guys do, and Ron Paul does. But, it's like regulations meant to counteract what the Fed is doing, and the bigger disease is like Congress trying to regulate the mafia. I mean, the mafia, has no boundaries, and neither does the Fed.
Yeah, when it comes to
any regulations are just going to, they're Band-Aids that may work for a short period of time, but eventually the Fed just says, we don't care
when
about
it comes
that.
to financial services and banking, yes, all the damage is being done not only by the Fed and their cheap money, but by the government and their guarantees. But as far as whatever, regulations are meant for consumer protection, consumers don't need to be protected by government. Consumers are protected by free market competition. That's the consumer's best defense, is a businessman who values his reputation, a businessman who's trying to maximize profits. You don't do that by screwing your customers. You don't do that. You do that by providing quality services to your customers, which would include a safe product, right? Nobody suffers more than the businessman if he's damaging his customers in any way.
Yeah, and isn't it an oxymoron to call the U.S. market a free market? I mean, when you have a counterfeiter behind the whole thing, it's hard to call it a truly free market.
Yeah, no, well, it's not. We don't have a free market by any stretch of the imagination. We have a very unfree. We have a very centrally planned, highly regulated, manipulated, and distorted market. We have elements of a free market within this system, but unfortunately, overall, it's not a free market, and that's why we're in so much trouble. And we don't appreciate the depths of the problems because we're still able to live off of borrowed money. But when the bills come due, then we will appreciate, the severity of the situation that we've dug for ourselves.
Right. Yeah, sorry to hear about Joe. I only saw him as a bear. Whenever I'd see him on CNBC, I saw him as a bear, so I never saw his bullish days.
No, he was the consummate bull. That's why he was on the Bull Bears. But he was one of the big bulls during the .com days, and it wasn't until the last few years that he became bearish. And so I don't know if I had anything to do with that, but he sat through on so many of my Bull Bear debates. But
all right, well, have a good one. I suggest everybody go on Solomon Kahn's website. He does some good videos about credit default swaps and stuff like that. Makes it really easy to understand.
Yeah. All right. Hey, thanks a lot. Next up is Chris from Memphis, Tennessee. Chris, you're on.
Hello?
Yes.
Hi, Peter. Chris here. I just wanted to say thanks for doing all the good work. I'm a long-time listener and a client.
Thank you.
My father and I are dual citizens, and we read about you a lot in the Swiss and Southern German papers with good acclaims. So I don't know if you know that, but you are being published worldwide.
Oh, well, thank you. Hey, can you hold on after the break? We got a commercial coming up, so I'll pick up the call out the other side of the break. Don't go away. You're listening to The Peter Schiff Show on SchiffRadio.com.
Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million.
Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff, SchiffRadio.com. You know, the gold and silver stocks, the HUI, has actually turned negative now. It's down a point. Despite gold being up over $10 and silver being up better than 65 cents, you still have gold stocks on the defensive. It really is incredible how little faith there is in this bull market. You know, oil prices are actually also up better than $1 now. We're almost back at $110 a barrel. Looks like we'll be closing the week right around that level, which is probably the highest weekly close. You know, we did get up to about 113 last week before we had the correction. But I think that gas prices, based on where they are now, will be resetting. So by the weekend, I think people will be seeing the highest retail prices for gasoline we've seen since mid-2008. But, of course, back then we had the financial crisis that happened, which immediately sent oil prices falling. That ain't going to happen again. So by this summer, I think that gasoline at the pump will be an all-time record high for the United States. I think it'll be well above anything that we had in 2008. Anyway, let me go back. I think I was talking to, was it Chris from Memphis?
Yeah, I'm here. How you doing?
Good. How are you? What's up?
Okay, two questions. I'm sorry I didn't call back last week when you had the guest and we were talking about the exit tax if someone renounces their citizenship. As I mentioned, I am a dual citizen. Now, how could the IRS or the government tax money if I renounce my citizenship if I've already shifted it overseas, like, within your accounts or somewhere else, if I've moved it to bank accounts I've opened up overseas? How can they come after me if I tell them I don't want to be a citizen anymore?
Well, I mean, they're not going to come after you in the sense that they're going to send, the army out to get you. But, obviously what they're going to say is if you want to give up your citizenship. Now, I'm not, that you're going, what they require, and it depends on what your net worth is. Because if it's below $2 million, I think it doesn't come into play. Or if your income was less than like $130,000 a year for the last 4 or 5 years. I forget the thresholds. But if you meet the threshold, then in order to give up your citizenship, you have to pay ordinary income taxes on the unrealized capital gains of all of your assets, which would include real estate, stocks, bonds, privately held businesses. And now if you don't do that, what are they going to do? I don't know. I don't know. Obviously, could they arrest you if you came back into the country? If they charge, well, first they'd have to indict you for tax evasion in order to be able to arrest you. But practically speaking, obviously, if you're not going to come back to the country ever, there's probably very little they can do. If you do come back to the country, if they wanted to make it civil, if you had assets in this country that they can attach, that they could levy. But if all your assets are offshore, I don't know what they would do.
I meet the income thresholds and the assets we have. It's all cash investment, stocks, bonds, and so forth. Besides the properties here in the States, the properties as the real estate values continue declining, they will be at the most floating on a neutral basis. They will not have appreciated, so we could go ahead and tell them all the unrealized gains. I'd be more than happy to. That's going to be minimal, but a bulk of the assets are going to be in investments in stocks and bonds that will be held overseas. So I have a hard time realizing that they could come.
Yeah, it doesn't. The IRS doesn't differentiate between where you hold them. If you hold them in America or abroad, they're still saying that if they want to tax you. What they're trying to do is they're trying to get people to avoid. See, let's say somebody has a big capital gains. Let's say I started a business and it went public, and now I've got like $100 million in unrealized gains. Let's say I give up my citizenship and go to a country where there's a low tax or no tax. Now the government misses out on the opportunity to tax me because I've renounced my citizenship. So what they're saying is, look, you can't do that because we're gonna if you ever leave, then we're gonna give you an ordinary income tax. So obviously you'd be better off, selling the asset, paying the capital gains tax, and then leaving. I mean, because you can't, if you, like, for example, me, there is no way I can renounce my citizenship without first selling Euro Pacific Capital, selling Euro Pacific Precious Metals. I'd have to sell off my companies, Euro Pacific Asset Management. I'd have to sell them off, liquidate them in entirety, and then only after I did that could I renounce my citizenship. Because if I tried to renounce my citizenship before doing that, I would be bankrupted.
So it's just like an inheritance tax, where it's a business or entrepreneurship destroying tax, basically.
If you want to renounce your citizenship, and the thing is, though, the fact that we have to punish people for renouncing their citizenship, I mean, that should tell you something. I mean, people should want American citizenships. You shouldn't have to pay a tax to get rid of it. And at one point, there was no tax. If you wanted to give up your citizenship, and nobody would want to give up a U.S. citizenship because it used to be a very, very valuable thing. Today, it's not so much a valuable thing. In some cases, it's an albatross around your neck.
That's exactly why my parents fled and emigrated to this country, and that's why we are considering leaving. But my other quick question for you was, we do have properties, and we currently are renting, and we were looking to buy a residence, a home, not an investment. With my family, I have young children, and I understand the interest rate and price inverse correlation, i.e. when the rates go up, prices tend to drop. How do you see that playing out in the short term in the next 2 to 3 years, with the Fed artificially trying to keep rates low? If the rates go up, the economy stalls. It seems to be working both sides in the factor of waiting for a short time before making a decision whether to purchase a home, if we truly find the home that we desire.
Yeah, well, look, I think rates are going to continue to trend higher, although at a slower rate than they would had the government wasn't interfering. And so that's going to put pressure on home prices. I think that this springtime, there's going to be a lot of homes on the market, and they're not going to sell. So I think that by the end of the year, prices will be lower than they are now. So I don't think there's any rush. I think you can certainly be patient and put in some very low offers on homes. And if somebody really wants to sell, they'll come down in price. But I think eventually prices will start to rise when inflation really kicks in. But in real terms, they won't rise. They'll actually begin to fall even faster. And at some point, mortgage rates are going to go sky high. And when they, and then real estate's going to be an all cash market. And when you can't borrow to buy real estate, the prices will be a fraction of what they are today. And if to avoid that, if we end up having hyperinflation, well then that's even worse. Anyway, thank you for the call. Let me see if I can squeeze in one more caller. I know we have a few people on hold. How about Robert in San Jose? Hello.
Hi, Peter. Thanks for taking my call.
What's up?
I have a question. A couple of years ago, I purchased a silver stock on the Toronto Stock Exchange.
Mm-hmm.
And I guess since then, they've been delisted from or apparently they didn't file the proper paperwork with the SEC. And so now they're not allowed to sell the stock in the United States.
Well,
so
is it still listed in Toronto? Because Toronto's got nothing to do with the SEC.
Oh, yeah, it still trades in Toronto.
Yeah,
but,
so
I was just curious, what are my options if I wanted to sell it? I purchased it using a Scott Trade account.
Yeah, well, I mean, we can trade in Toronto. I mean, do you have the certificates?
No, I don't have the certificates. They were sort of electronically, I guess, filed.
Look, just transfer them over to open up a brokerage account with my company, Euro Pacific. Transfer the account over, and then we can sell them for you in Toronto if you want to sell. I don't know, maybe you want to hold it, but eventually, if you want to sell, it doesn't matter that they're not trading in the U.S. We can still trade them for you on the Toronto Exchange, no problem.
Okay, that was my question. Yeah.
Yeah.
Okay, great. Glad to hear that.
Sure. All right, I'll see if I can squeeze in one more call. Mike from Chicago.
Hi, Peter. How you doing?
Good.
Okay, couple quick things. I want to thank you for everything you're doing to inform and educate the people, protect them from what our government is doing. You are a true patriot.
You know what? All right. You know what? I think we're going to have to end there. I don't think we have time for your question because I can already hear the music. But, hey, call back again late next week. Anyway, thanks, everybody, for listening. I will be out next week, Monday through Thursday. I will only be on Friday. I will be in Breckenridge, Colorado, with my 8-year-old son, Spencer, taking him skiing for spring break. So hopefully we have a good time there and have some good snow and some nice weather. I will be back again a week from today for another episode of The Peter Schiff Show on SchiffRadio.com. Take care, everybody.